Hello, and welcome to the GSE webinar series. This video will cover the Customer Risk Assessment, or the CRA for short, as well as what the AML CFT inspectors will be focusing on during the AML CFT inspection, and some best practices that you can take. A CRA is the process of evaluating the money laundering, terrorist financing, fraud, sanctions, and risks posed by each customer. It forms part of the operator's AML CFT framework and helps determine the level of due diligence and monitoring required for the customer. The purpose is to assist the operator to be focused on the customer population that is most likely to attempt to launder money or fund terrorism. The risk assessment will identify high-risk customers, and for those customers, they must be subjected to enhanced due diligence. The CRA needs to be completed as soon as reasonably practicable. So this means as soon as the customer account is opened for an online operator, or in the case of a bookmaker or casino, as soon as the individual exceeds the threshold of €3,000, and that's within a single or several linked transactions. The CRA should be designed by AML CFT experts, such as the MLRO and the AML CFT compliance officer, and should be carried out in practice by staff members with the appropriate training. The CRA must include the consideration of mandatory risk factors, and these are listed within the presentation. The code lists 3 factors that the CRA must be. It must be undertaken as soon as reasonably practicable after entering into an ongoing customer relationship or carrying out an occasional transaction. The CRA needs to be recorded and documented, and the CRA needs to be regularly reviewed. The CRA must consider the following relevant risk factors. The business risk assessment. So the business risk assessment should directly drive and inform the customer risk assessment. The nature, scale, complexity, and location of the customer's activities. The way the products and services are provided to the customer. And this refers to the delivery transaction methods assessed by the customers. The involvement of third parties for elements of the customer due diligence process. And finally, whether the operator meets the customer during the ongoing customer relationship or occasional transaction. There are 2 factors that dictate whether a customer must be high risk and treated as such, and these are whether a customer is resident or located in a List A jurisdiction, and whether the customer is subject to an AML CFT warning issued by a competent authority. There is also 12 factors that may deem a customer a higher risk, and that is whether activity in a jurisdiction that the operator deems to be higher risk of money laundering, terrorist financing, or proliferation financing, whether a customer is resident or located in a List B jurisdiction, then they may pose a higher risk, and this should be considered within the CRA. Whether there's activity in a List A or List B jurisdiction. So this is separate consideration to residency or location, and it should consider the following. the source of the customer funds, the destination of the withdrawal, the original source of wealth, or where the customer is logging on or contacting the operator from. So this refers to an IP address or telephone number checks. A situation that by its nature presents an increased risk of money laundering, terrorist financing, or proliferation financing. If the customer is a PEP, nominee shareholder or shares in bearer form, the provision of high-risk products. So this is particularly relevant when an operator offers a range of products with different risk profiles. High net worth individuals, legal arrangements, persons performing prominent functions for international organisations, sporting professionals betting on sports, or customers using multiple sources to fund their gambling. During an on-site inspection, the AML CFT inspectors will be focusing on who contributes to writing the CRA, whether there's any technology used to assess the customer risk, if the operator accepts virtual assets, virtual goods, whether the CRA includes relevant typologies from the National Risk Assessment or other publications. And then they'll have a closer look into the customer sample. And the final slide's on best practices. So focus on customers who are frequently just under any high risk thresholds. For any operators targeting retail customers, set your thresholds based on average income for the customer demographic. Clearly define your risk ratings. Implement a dynamic risk assessment. Risk ratings should not remain static. Risk review whenever there is a significant deposit increase, new payment methods, a change in geography, any adverse media alerts, or any suspicious activity indicators. And maintain a clear audit trail. Document risk factors identified, the risk rating calculation, whether there's any due diligence undertaken, any support and evidence reviewed, and management decisions and approvals. And that's it for the CRA section. Additional information can be found on the GSE website, and a particularly good resource is the AML guidance for online operators. Thank you.